Listen up. If you have somewhere between 25 to 100K plus in cash, this is going to be the most important video you have heard all year. Why? Because the wealthy don't just save money where inflation eats at it and raising prices. They deploy money like employees to bring in more. And I'm going to show you exactly how to do that in this video, step by step, through something known as the PE flip. Because when it comes to wealth building, I know you're not just here to learn about long-term wealth. You actually want to learn how to be rich as well. Well, what if you can do both at the same time? It might not just feel like it. I'll show you exactly how to do it. So like I said, let's get into the training. I'm going to teach you guys how to actually start building wealth by using the cash you already have. No more waiting to make 10% a year or 401k or the boring advice about just put it in the market and forget it. Yes, there's a place for that, but we're talking about real acceleration of wealth to get there 10 to 12 times faster, to cut down your years from decades to just a few years, and some even accomplish it in 18 months. What do I mean by that? Well, it's something that's known as what I call the PE flip, okay? You need to stop thinking like an earner and start thinking like a maximum hedge fund investor. What do I mean by that? Well, if you know anything about real estate, one of the most popular ways that people hear about is buying a house, fixing it up, adding value, and then reselling it later for a higher price, right? That's what's called a fix and flip. Well, we do something that the private equity does, which is called the PE flip. And what that essentially means is that we're going to make money as if we're doing a fix and flip, but without buying real estate, but using our own cash, okay? How we do that is very simple. Instead of using our cash as gas, okay, we use our cash as the asset itself. Okay, when you're investing in things like real estate or you're buying stocks and things of that nature, you're using your cash like gas. Okay, you're putting your cash into a vehicle, hoping that vehicle will make you more money. Well, what if we can turn your cash into the car itself, right? Make your cash the asset, that the cash by itself generates the income you need to eventually retire or hit your freedom numbers or take a vacation or do whatever you want, right? And that's where the thinking has to change and where the PE flip actually comes in. So I'll give you a perfect example of this. Red Lobster, a very popular restaurant, very well known. They sold their company to a private equity firm, a hedge fund pretty much. And what the hedge fund did was very smart, okay? Golden Gate was the name of the hedge fund. You can research this. They bought Red Lobster for $2.1 billion, okay? And after they did that, they immediately, literally within weeks, took the real estate and sold the real estate for $1.5 billion. So imagine owning all the McDonald's in the world while you also own the real estate. What they did is that they separated the business, the service business, the restaurant business from the assets, which is the real estate itself, to generate cash, $1.5 billion. Then they sold 25% stake in the rest of it and generated another $575 million. So pretty much they paid $2.1 billion and literally within a year they made $2 billion in cash, while still keeping 75% equity in the business. And later on, they sold more and pretty much cashed out, okay? But what we want to pay attention to is not exactly what they did. What we want to pay attention to is the structure that they performed it in, okay? Because hedge funds don't really like making money by adding value. They make money by structuring deals, by structuring assets. And what we're going to do is structure our asset in a way that it actually pays us. So just like when they bought Red Lobster and sold the land for $1.5 billion, we're going to take our cash and we're going to use options to generate cash for it, almost like paying rent. So how that works, ladies and gentlemen, you're going to take your cash and put it into a brokerage. So let's say Charles Schwab, okay? That's the one I recommend, Charles Schwab. But you can use whatever brokerage you want for this, okay? And you put your cash in there. So let's say you put 50K in there. Well, what that private company did, Golden Gate, was sell the real estate underneath, generating $1.5 million. What we're going to do instead is sell an option against that and generate 1 to 2% on our cash in 5 days. Okay, literally 5 days. So we're doing the same structure that private equity does, but we're using our money. So if you had 50,000, if you're making 2%, that's about 1K a week that you're putting in your back pocket. Okay? At the low end is 500. And you can get up to 1K a week using your cash as an asset, but we're leveraging it like private equity does, okay? And by the way, this is extremely conservative. One of the most conservative ways you can actually generate income from the market. Okay, this is not day trading in any way. We're just structuring our money like a private equity fund, where we're using the capital as an asset to generate income. Now you might be thinking, how does this work? Does this even make sense? Guys, this has been done for years. Literally in 1993, a famous article came out where Warren Buffett did this exact same thing and made $7.5 million in premium in cash doing this, where he put his cash as an asset to generate income, okay? So you can pick any stock you want, okay? I recommend doing stocks that are profitable like an S&P 500, but you can literally sell options on it and generate pure cash flow that enters your money, your brokerage account every single week, and you can transfer to your bank account every other day. So I sell options, I generate income, and within 24 to 48 hours, the cash is in my bank account. Okay, that's how this works. But this is only one of the ways we do it. We can even go a little bit more aggressive, like they did, and generate 3% on our cash. Okay, so that same cash is working over and over again. But now instead of just sitting in a place where inflation is eating at it, or a quote unquote high yield savings account that's only paying 4% a year, we're slowly making anywhere from 4 to 8% a month on our cash doing this method. So with 50K, you can literally pocket up to an extra 4K in cash flow every single month. The top balance doesn't get touched. The bottom balance is where you're receiving cash every single week and every single month by using your money as an asset. Okay. Now, this has been done for over decades. Warren Buffett in 2008 wrote a letter to his shareholders saying that they generate over $4 billion doing this exact same method. See, it's not about what you're doing. A lot of the times it's about the structure. So when we structure this and we use the on-call babysitter method, okay, or the private equity flip, we're literally generating cash. But now that you generated the cash, what do you actually do with it? That's the secret, okay? You take that cash and now you buy assets, okay, with that money, like private equity. You want to buy things that give you cash flow, okay, but the main thing is that the money that you're using to buy assets, to buy stocks, to buy options, to buy real estate is generated from your own cash. So let's actually look at this at a bigger scale. Okay, one thing that some of my students and friends like to do is this. So let's take it out a little bit further. Let's say you have 250K in cash in a brokerage in a retirement somewhere, or somebody gives you money to play with. You have a friend or a rich uncle somewhere. Now you're generating 1 to 2% a week, okay? So let's average it out. You're generating 3K a week, which ends up being about $12,500 a month in pure cash flow, okay? With 250K in cash, you can generate up to 12.5K a month in pure cash flow, and your money is doing the work, not you. Here's the beauty. When I bought a house, okay, it was about 300K, give or take, okay? The down payment on it was 3.5%. That was about, I think, 10K was a down payment, give or take. With closing costs, everything, let's say you're all in about 12.5K. Now you bought a house, you can rent it out and generate cash flow. Or I recently bought a house in Ohio. The purchase price of that house was $87,500, okay? And by recent, I mean I bought this house like 2 years ago, give or take. Okay, the down payment on that was literally 15%, okay? 15%, about 12K, right? So literally what I'm saying is that every month I'm printing a rental property. Think about that. Okay. I take that cash, I buy a house, I rent it out, and this house was giving me $1,250 a month. After loans, everything like that, I think I was netting about 300 originally every single month, right? So now you're building other cash flow from the original source of your wealth. Cash turns into more cash, turns into assets that bring more cash. So you're literally continually having money babies based on your original cash position. This is where the game changes because now you can enter the 3 levels of freedom that I talk about. I'm going to go through them real quick, okay? Because what you want to do is rinse and repeat this till you hit your freedom number. Your freedom number is a calculation of how much money can you live off purely off the interest. For example, when people get rich, let's say you sell a company for $10 million or $20 million or $30 million, they don't start spending that $30 million over their lifetime. No, they put that money inside of an interest generating account and they'll make like 4% a year or 5% a year, or they'll put it in the market and then they'll make about 10% a year and they live off the interest. That's literally what we're doing, except you don't need to be a mega millionaire to do this, okay? If you have 6 figures in cash, even 50,000, 25,000, you can literally start generating cash on your cash. Pretty much what I call a virtual millionaire, which is stage 1, okay? Where you can your cash can bring in 3 to 5K a month passively on 1% returns through leveraging options. That's what a virtual millionaire is. Because if you put $1 million and you get 4% interest on it every year, that's about $60,000 a year, which is about 3 to 5K a month. So at that point, you're a virtual millionaire. The next level of freedom is where you get virtual freedom, okay? So not only are you making 3 to 5K a month passively through selling options, but now the cash that you're generating from options every single month, every single week, covers your living expenses. So now you don't have to work. Your cash is doing the work for you. What I'm teaching you guys how to do, if you don't realize this, is to compress time. Now you're not doing this over 10, 20, 30, 40 years of work. No, you're using your cash that you already have or you have access to generate income. Then the final level is compound freedom. When you have enough cash, that compounding cash covers all your monthly expenses and some. So what does that look like on 3 different levels? Great question. On level 1, virtual millionaire, you're generating about 3K to 5K a month in passive cash flow, okay? As I've shown you, to generate about 3K to 5K a month, you can do that with 100K in cash, literally just doing cash secured puts, okay? Number 2 is virtual freedom, where your monthly expenses are now covered by the cash you're generating. If your expenses are under 5K, which I doubt, okay? But if it's under 5K, once you hit virtual millionaire status, you've also hit virtual freedom. For some people, that's not the case, okay? Some people might need 15K a month to reach their virtual freedom number. So you need to do the math. If I'm generating 2% a week on my money, okay? 1 to 2% a week on my money, how much cash would I need to deploy to make that 15K? Very easy. Just take out a handy calculator here, okay? And I'm not trying to do math, but you say 15,000 a month divided by 4, because they have 4 weeks. They have 4 weeks in a month, okay? That's about $37.50 a week. And you divide that by 0.02. Guys, with $187,500 in cash, you can literally get to 15K a month in passive cash flow. That's it. 200 grand, and you can literally make 15K a month, okay? You can essentially double your original capital with just 187 grand. That's how this system works. Then we talk about compound freedom, okay? So let's say you need that same 15K a month in expenses. That's about 180K a year. Well, in order to make 180K a year passively, there's something called the 4% rule. You want to be able to withdraw 4% in interest of whatever you have your money in and still have the money growing. So, very simple. You just take that 187,500 and you divide that by 6%. Why 6? Because you want to give a little room. You want your money to keep compounding even though you're taking money out. Okay? So if you do that, all you need is 3 million. Okay? So with $3 million, you never have to do anything to make $187,000 a year, but you can make the same cash flow with only 187,000. Literally a tenth of the cash, same results. And the work that you're doing to generate this cash is one trade once a week that takes me 5 minutes. So you can decide to wait till you have the 3 million, or you can enjoy your life now by generating 1 to 2% in cash on your money, okay? And how I do this is very simple. There's something called the selling income system, right? And this is it here, guys, where I teach you guys how to generate cash on your cash. I'm going to put the link to this below, okay, so that you guys can learn how to make money from probability, not gambling, okay, step by step. And what I want you guys to realize is the dream you want is actually there, okay? So let me bring this full circle for you guys. When you're generating cash, if you don't need it immediately, you buy assets. Those assets pay you more cash, and then you can get to your freedom numbers quicker, okay? So it's not about how much money you make. It's really about how your money behaves. Let's get your money behaving the right way, and I'll see you on the next video. I'll put the link below. If you want to learn how I do those cash secured puts to make 1% a week, that will be the next YouTube video I'll watch. It's just right here, the cash secured put strategies for beginners. If you want a more in-detail mini course about this, that is where the selling income system comes in. And I highly recommend you guys grab that. And I will see you guys on the next video. Chat soon.